If we have a look at sales volumes across the nation, obviously during the boom period, we saw a lot of sales activity happening. And then obviously it started to fall off. And we didn't really see a pick back up in activity until 2007. Again, remembering that value growth was quite strong during 2007. And then global financial crisis, we saw the number of sales transactions slow quite a bit. Their lowest level in about 12, 15 years during the global financial crisis. And then interest rates were cut, first homeowners grant boost came in, and we saw a pick back up in activity. But we certainly didn't get back to those levels of 2001 to 2003. And then when the interest rate increases started to happen, you can see that there's a clear downwards trend in sales transactions over that time. And at the moment, we're seeing that sales volumes are sitting about 11, 12% below their 5-year average across the combined capital cities. In Sydney, they're only about 5% below average, so Sydney's faring much better than some of the other markets. A good example, somewhere like Adelaide, where volumes are down about 22% below the 5-year average. And in Melbourne, a market that's really slowing quite rapidly at the moment, volumes are down about 19% from their 5-year average. If we have a look in Sydney, so as I kind of alluded to earlier, for 5 years, values really went nowhere. There was a little bit of an uptick in 2007, but still didn't get back to those peaks that were recorded back in early 2004. So you can see value growth most recently peaked at 12.9% over the 12 months to March. And then over the 12 months to August of this year, they've only increased by 0.3%, as we've already showed. Since the beginning of 2008, values in Sydney are up about 18%. But again, remember that this is after a long period of no growth in values. And values actually fell by about 10% from their peak in early 2004 to the low point in the market. And obviously areas like some of the Western Sydney suburbs saw much greater falls than that. And that's actually highlighted up there. So 17.7% growth over the last, since the start of 2008, but over the preceding 5 years, values were actually down by 2.8%. And that's largely why, when adjusted for inflation, values are still below where they were at their peak. So volumes, I kind of mentioned that they were 5% below average, and you can see great times back in 2002. If we go back to the previous slide, and then you can see that growth really started to slow. Late 2002, early 2003. You can see volume started to fall off there as well. And then for much of the next 5-6 years, sales activity was fairly limited right across Sydney. That's partly because of affordability, but also you need to remember that stock additions onto the market had been fairly constrained as well, so there just wasn't the stock out there for people to buy. And then we saw a big spike in early 2009, and then falling away again from about September, October 2009, once those interest rates started to get lifted. And at the moment, comparatively speaking, Sydney's doing quite well. Sales volumes are relatively buoyant compared to what's happening in most of the other capital cities. This chart here, the Reserve Bank asked us to put this together, and what it does is breaks down the Sydney housing market into the most affordable 20% of suburbs, the broad middle 60% of suburbs, and then the most expensive 20% of suburbs. So you're looking at your premium end, your middle end, and your lower end of the market. And you can see at the moment the premium end is actually the weakest. So values in the top 20% of suburbs are actually down 2.5% over the last 12 months, compared to a 0.7% increase in the middle market and a 1% increase across the lower end of the market. So none of them are doing particularly well, but the top end of the market is certainly dragging down the performance of the overall market. And you can see top end's high risk, high reward, I guess you would say. In the good times, it grows much faster than the other two sectors of the market. But in the global financial crisis, you can see it fell a lot deeper than the other two areas of the market. Then spiked right up again during 2009, 2010, and then fell away much faster than those others. So it's a little bit more volatile. One interesting trend to note at the moment, the weakest market in Sydney, well, one of the weakest markets in Sydney is actually the eastern suburbs. And I mean, a lot of people would probably like to live in the eastern suburbs. You've got the beaches, you've got the beautiful big houses there. But values in that market are down about 10 to 15% over the last 12 months. In comparison, you go to the inner west, similar amenity, fairly close to the city. But I guess the housing offering is probably you probably wouldn't say it's as nice as it is in the eastern suburbs, but it's certainly more affordable. You can get into that market for $800,000-900,000 as opposed to a couple of million for the eastern suburbs. The inner west has actually seen values grow by about 10% over the last 12 months. So it seems that people are going for more affordable options with a similar level of amenity, which is quite interesting. And even the lower North Shore we're seeing has seen some fairly significant price falls over the last 12 months. This charts auction clearance rates, and everyone gets a bit excited about auction clearance rates, but you do need to take them with a grain of salt. Auctions in Sydney account for about 20-25% of the overall market, and there's a heavy bias towards the premium sector of the market as well. But what they do is provide a good leading indicator for the market. It does take time for any data provider to capture the necessary information to process how the market's performing, and our latest data is only up to August. But clearance rates, we've already got up to October. You get them each week. And the thing you'll note is that clearance rates have been much lower, during 2011 than they were during 2010 and 2009, typically bouncing between about 45 and 55% on a week-to-week basis. So that's not a particularly strong clearance rate in the market at the moment, but it is interesting to note volumes are still very strong, even though you've probably only got a 50-50 chance of selling your property at auction. So people are willing to take that bet and are still giving it a shot at auction. And even if it doesn't sell at auction, perhaps it is getting a few more eyeballs and a few more people looking at that property than would otherwise have come and had a look.